Good morning, everybody. Hey, welcome to this Tuesday, April 9th. Hope you had a great weekend and a good day, and you're off to a good start for the week. Just coming back from seeing the solar eclipse, pretty cool to get to see that. But hey, look, before we get started today, yesterday we had, everything was going gangbusters, pretty good, green ink until the end of the day, and everything kind of fell apart. So remember that risk is a big deal. You need to know how much risk you have in your portfolio, and you need to make sure that it matches up with the amount of risk you should have based on your current circumstances. Hey, give me a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
Crow there from 105.7 Light FM. Glad you're here today. Appreciate you. It's 8:41 now, 19 before 9. Time check in on money and see what's happening on Wall Street. The long and short of it is at the end of the day yesterday, not very doggone much. That's probably a good reason for it, too. Let's check in with Phillip Statler from Statler Financial Services and see what his take is on things at the moment. Phillip, I thought you were working hard on taxes yesterday, and here you were staring at the eclipse, huh?
I was. We left Friday afternoon late, flew up to my daughter's in Evansville, and worked from up there, believe me, for a couple of days, but took off most of yesterday and actually got to see the total eclipse. That was kind of cool. Got a couple decent pictures, but it was hard to get a picture. But it was neat to watch the sunset. Basically, is what happens when it's totally blacks out. It's like a sunset again, and so it was really cool. And glad I got to participate.
And I'm glad to have you back here this morning as well. I kept getting stories, and in 17, when we had a little bit more coverage here in Sebring, my cats got freaked out even over that, and it wasn't anywhere close to a total. Reading articles about farm animals going absolutely crazy when things got dark in the middle of the day up there, especially.
Yeah, the birds started chirping, and it was about a 10 degrees cooling off as the moon moved over the sun. It dropped down and the breeze picked up, and it was about a 10 degrees difference between. Yeah.
I've been told that happened, but I'd never experienced. That's kind of cool. Well, welcome back, and we're glad you're back in town. Guess looking at the end of the day yesterday, absolutely nothing happened in your absence to speak of. The Dow ended up the day down 0.03%. Standard & Poor's was down by 0.04%. And the barn burner of the day was the NASDAQ. It was up by 0.03%. I kind of went out on a limb in the morning and said with the CPI numbers coming out tomorrow, look at inflation that could be market moving. I think we're probably sitting on our hands that and waiting for the beginning of earnings season, which really starts in earnest at the end of the week, right?
Yeah, it does. It was, let's face it, we had some decent green ink, at least a couple times I peeked at it yesterday, and then all of a sudden it kind of fell apart late afternoon and ended up flat to slightly red as we head into this morning. The question is, what are we going to do today, right?
The biggest downer I think yesterday probably got us to do it is President Biden announced a plan to forgive a few more $1 billion in student debt, which may or may not be a good idea. I won't make a stance on that, but the time frame of pumping more available money into the marketplace is not necessarily what economists say is the best thing if we're going to continue fighting inflation. So that didn't help the market a bit, especially as jittery as we are right now, talking 1, 2, or 3 interest rate cuts before the end of the year. Last thing in the world they need is one more thing to be able to tell investors, hey, might not be any at all, Bunky.
Well, yeah, and that's true. And we don't know what's going to happen, but you and I both agree that if we get any, based on the numbers, one would be about it towards the end of the year. I saw this, and this may have a little helpful effect, I guess. In the next several weeks, Dave, we could see $300 billion leave the market, leave the system.
Leave.
Yep. Tax day's coming. And they say a lot of people, last year was a great year for capital gains. And so people are going to have to take some money out of their portfolios to pay their taxes. And you've got that. You've got the quantitative easing that's coming up. this quarter, which is another $95 billion that's coming out of the system this month. And then on top of that, it's a quiet time. Companies are not allowed to buy their stock back right now because they can't do it until after they report their earnings.
That's true. I hadn't even considered, because we hadn't mentioned it in a little while. That's right. The Fed is still, divesting a lot of its bond portfolio, taking money out of the market, even while they aren't bumping interest rates up. They're still narrowing down their balance sheet, aren't they?
They are, and we forget about that because nobody talks about that during the interest rate hikes and cuts discussion. But it is so they say that we could see $300 billion leave the system this month.
Well, the other element, too, is earnings season news. One of the things that I was talking about yesterday morning is expectations are considerably less charitable this year on the Standard & Poor's 500 as far as individual stocks are concerned than they have been before. I mean, last year was almost nuts on flat as far as profit increases and earnings increases on the major stocks in the Standard & Poor's 500. The expectations that I'm reading for the big publicly traded stocks this year is investors are not going to be taking any prisoners as far as guidance is concerned. You aren't showing a good 2024 ahead of you, and you may very well really pay the price for it when these reports start coming out at the end of the week.
Well, that's true. They're expecting some good news, and if you don't have good news for the rest of this year, it seems to be, at least what we've been seeing, is that you're getting slammed. And I suspect you'll continue to see that.
Yeah, it's going to be a real tough room. I was looking at like almost 180-degree turnaround as far as expectations for increases in earnings. I mean, we've been pretty charitable. We've been seeing people showing increases or slight decreases or flat for the last few years, and that's run the price-earnings ratios up way high on these indexes. Now, all of a sudden, investors are saying, look, guys, the economy's going great guns. Our biggest concern is how we're going to slow it down a little bit. About time you birds started making some money out of this economy.
That's right. They got to support that PE ratio eventually.
Yep, exactly. There are some expectations, some bullish expectations out there. We always poke fun at the major brokerage firms with a big range. They're saying Wells Fargo has joined the parade. They're now saying that the Standard & Poor's should end the year over 5,500. Well, there's another planet heard from as far as expectations.
Yeah, that's we're at 52 now. And we don't expect, you and I at least don't expect an interest rate cut. So it might be interesting to see if we can continue this trajectory, especially through earnings season. If we don't get a lot of optimistic outlooks for the year, what that's going to do to the S&P 500.
Well, there's going to be one interest rate cut. It's going to be 1 month before the election. It happens every time, doesn't it?
Yeah, you would think, right? So
cynical much. I got another piece out talking about expectations on the S&P 500. The tech stocks are going to have a tough room to play for, too. They're expecting NVIDIA to grow by like 406% on margins. Amazon is expecting 175% growth. Meta, Eli Lilly, Alphabet, Berkshire Hathaway, Microsoft, they're all expected to be in that top 10 as far as earnings growth this year. We've got some really big stocks that have some really high expectations as far as profit is concerned. And really, as far as household names are concerned, nothing this morning to speak of. The first household name we're all going to recognize comes up after the market closes tonight. That's WD-40. And then I think tomorrow we get Delta Airlines and a couple of others piddle in before all the big banks start reporting on Friday. I'm really kind of curious. You get some conservative guidance going out this quarter. I mean, that $300 million getting pulled out on tax day is going to look like peanuts.
Yeah, it is. I mean, that's gonna have some cause and effect on the markets as a whole as we head into the rest of this week. And tax day comes, right? 6 days away, next Monday. You got to make sure your taxes are filed by then. So it's going to be interesting to see what happens as we walk through that process, as money gets sucked out of the system to pay taxes. They said that this may be, the government's going to be happy because they should be a lot of higher tax bills this year.
I'm just so happy to hear that, Phillip. I got into a case of bracket creep this year what I thought was going to be a pretty good number, and my bracket creep ended up getting to the point where I didn't get anything back to speak of this year. Resetting the table, it was basically a nothing day yesterday on Wall Street. When you talk 0.03% in one day, that's pretty close to a nothing doing process. 45 minutes before we open this morning, what are we doing?
We got some green ink this morning, Dave. Not huge, but it's green. The S&P 500 is up 0.3. The Dow's up a little over 0.1%. The Nasdaq 100 is up 0.4. So everything's got some green ink around it. On the other side of the coin, man, silver is skyrocketing up to $28.20 an ounce. That's up almost 1.5% from yesterday's close. Gold's up 0.8 to $2,369 an ounce, and crude oil is going down by about 0.2, still way too high, Dave, at $86.27 a barrel.
I hate to talk trading range, but I'm starting to just hope to see it stay under 87 for a while. Overseas markets at the close at 6 a.m. The Asian Rim was mostly up on balance, maybe about 0.5% for the average stock index across the Asian Rim. That even included mainland China yesterday. European markets are a little bit on the mixed side. Germany, Italy, and France are off by a little bit. Great Britain and the European index overall pretty close to nuts flat this morning. 1/100th of 1% up on the overall European index halfway through their day today. Somebody need to make sure that their retirement stays on track. We're not really sounding like Mary Sunshine through most of this morning's report, Phillip. Might just need a little protection. How do I find you to make sure retirement works out properly for me?
Dave, that's why I developed the core retirement design to help people design that retirement they always dreamed of. Give me a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back again here tomorrow morning. You have a good day, sir, and I'll see you then.
All right, take care.
Appreciate it. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. It's not.
Hey, folks. Glad you're able to join us today. Talk to you again tomorrow, same time, same place. Take care.